Live, and we're there. Good morning, Ron. Good morning, Cav. Good morning, Erla. Better Dad, Bejoy, Bob B. the man. The man. That's what I'm talking about. You guys ready? Let's have some fun. Hey, Nanda. Steve Diego's here. Wow. This is like a meeting of the minds. I think we should just stop worrying about trading and solve the world's problems. We got everybody here today. Um, let's go. I like it. Man, I have been snapping pictures like a maniac this morning, having fun, looking at stuff. Hey, good morning, Estefania. Call him Elo. Guys, we're going to check news today. I was with you. I like Elo better. It sounds cool. Um, and one of the things that we do every morning is we check news. You guys may have noticed that the G7 couldn't pick a harder time for a world fix. Man, Peter, it's no fun if it's easy. Right? It's no fun if it's easy. That's what makes the accomplishment amazing. I am that ant and the world is the rubber tree plant. Um, High hopes. Guys, forexfactory.com/calendar. Today is Wednesday, the 21st of May. And you will notice, there you go, Ron, Adamant. I loved that cartoon as a kid. G7 meetings, guys, all day. They're doing this. Talk about the talking heads. They are chit-chatting and discussing and brainstorming and doing all those things. And yesterday Better Dad asked me, he said, Mark, do you have expectations for the G7, like what the market's going to do? And I told him I didn't. I didn't have any expectations. I didn't really have any basis. But watching it for the last 2 days, I would say patience is going to be the expectation that I'm going to put on myself. The market hasn't been trending as much. It's been consolidating and then breaking out. And if you scroll back and look at your charts, you're going to notice that those breakouts were breakouts of Fibonacci areas. So we knew where they were having trouble, and we knew when they had broken out, and that's when it was time to jump. And I still think a lot of people did well yesterday. If you get caught in the consolidation, though, if you get caught in the fight between the buyers and the sellers, the do's and the don'ts, the we's and the them's, whatever you want to call them, guys, go back and look at your rules, and very often you're going to find that rule number one wasn't met, that you didn't actually have the momentum that you needed, or that rule number two wasn't met and you were trading right into areas. When I have struggles, and yes, I have struggles just like everyone else, when I have struggles, very often it is me trading an opinion, a hope, or a want rather than trading what my indicators are telling me. So I need to learn to read my indicators better, I suppose, and we're going to do that with a high probability trend trade. I'm going to put myself back in school, refresher course, remind myself what the best of the best is, and I'm going to do it from the education page. And Chris was messing with the page today. Let me re-up it. What did he do to my web trade resources? Man, he changes this all the time. I'm going to have to yell at him a little bit. Guys, the trading plan rules. Everything that I'm going to talk about this morning is going to come from here. All the rules that I discuss, the looks that I introduce you to, and it's all done through a high probability trend trade. A high probability trend trade is a trade where each indicator on every chart agrees with the rules for the trade. This is going to be when your triggers are the strongest. There's that momentum. And when there's nothing in the way, termination conditions are not present. And guys, this is a trade that gives you the potential to win up to 70 to 80% of the time if you follow the rules, if you embrace these advantages. When you're winning that much, it's pretty cool. Creates an awful lot of confidence. They say that confidence comes from the memory of success. So my first hour in this room is designed to give you everything you need to find the highest level of success as a brand new user. And we're going to talk about this high probability trend trade, guys, because to be successful, you're going to have to learn to read your indicators. You're going to have to be able to look at your screen and understand what's going on in the wonderful world of futures. So chart reading is the goal with this first trade. Chart reading, being able to look at your charts and say, I have what I need, I have the advantages, it's time to enter the market. Or, even more importantly, I don't have what I need, I don't have the advantages, I'm going to choose to do absolutely nothing. It cost me nothing to do nothing, rather than fabricate a trade based on hope. So, when we talk about chart reading, one of the things that I'm going to mention to you is that that's going to be about 90% of your day. There's going to be about 90% of your day where you're doing nothing and you're waiting and you're impatient and you're chomping at the bit. And then 10% of your day is going to be actively trading because you have an edge, because you have an advantage, because you're looking at a pattern that's been proven to win more than it loses. And once you embrace the advantages, once you really key in on your chart reading, and it doesn't take long, you're going to understand some pretty cool stuff. You're going to know where the market is likely to continue. This is actually where your entry for those high probability trend trades are going to be, where those entries for the medium probability trend trades are going to be. You will understand where the market is likely to go, and those likely to go spots are going to be targets, and it's going to help you with management. And then finally, you're going to understand where the market is likely to stop. And a likely to stop area is really just a spot where the trend could end. And they're going to stick out to you. And you're going to be able to see them, and you're going to say, wow, there is an area that could end the trend. There's an area that could create a bounce. There's an area that could stop the forward progress. I think my best choice is to not trade into it. And you're going to be able to do that. And you're going to be able to do that pretty quick. It only takes 3 rules to get you there, guys. So maybe don't make it difficult. Don't add your own rules in the beginning. Don't be tempted by the siren song of trading the way the people that are 5, 10, 20 years ahead of you are trading. Stay in your lane. Keep it very basic, guys. Simplicity pays dividends. The 3 rules of the high probability trend trade, guys, each one creates an advantage. When that advantage is in play, you're going to look for the next advantage. So strong triggers, this is going to be the first thing we talk about. That's going to give you the advantage of momentum. And anytime you say strong triggers or momentum, I want you to think of a market that is difficult to stop. Rule number 2 is going to make sure that you have room to your profit targets. And we're going to call that the advantage of a clear path. So when you put these two together, I want you to picture the biggest, fastest train you've ever seen, just flying down the tracks, nothing in the way, no brakes. And guys, when you have momentum and path, you're going to see in this room that the majority of the winners posted have momentum and path. That when you have momentum and path, you have everything you need to build a very consistent, a very profitable trading plan. So as you begin your journey, guys, focus on these two. Really let momentum and path lead the way. And then rule number 3 is just defining that point where the market is most likely to continue. That's your entry rule, number 3. But momentum and path, guys, those are the core. That is the golden goose. And it only takes 1 bar to identify them. That's what's pretty cool, guys. There's 2 charts for 3 rules, 5 things to think about. That's not a lot. The large chart is the first thing that you look at. The large chart leads the way. The large chart is a very slow-moving chart, guys. It's hard to see change. It's a broad stroke of a brush, and it's showing the overall opinion of the market. The large chart, through this very first bar, the most current printing bar, is going to define the direction of the market, letting you know which way you're looking for your rules to be met. It's going to show that rule number 1 is met. You have the advantage of momentum, or that it's not. And it's going to define the areas. It's going to show you exactly the places that could become problematic. And rules 1 and 2 have to be true on this large chart inside from this just 1 bar. And when they are, you'll go to the small chart. This is your entry chart. And the entry chart, it refines that big picture. It shows you the inner workings of that 1 bar. So inside of this bar, from the very bottom, there is a full retracement, a bounce off an area, and continuation of the direction of the trend. we use this refinement process, it's going to allow you to reduce risk dramatically. It's also going to help you increase profits because you're going to be pinpointing where these tails on that one bar are most likely to form using the areas inside the triggers on a smaller, faster chart, guys. So they work together. It's very much a symbiotic relationship. And I like you to think of who you're trading with and who you're trading against. You'll notice that when I teach this classroom, if you're still new with me, I like to create these scenarios in my head that are kind of metaphors or analogies for what the market's doing. This is my favorite metaphor, guys. The large chart, that big chart, that slow chart, this is the large crowd. These are the men and women with the money and the influence to create the trend, to establish that momentum. And these are the same people that are reacting at those key areas that you're going to know about long before you get to them. The large crowd typically wins, guys. And when you fight the large crowd, whether it is momentum or areas or even trend, you're going to find that you're probably going to take more losers than winners. The small chart is like a small crowd, and the small crowd loves to fight. These are the guys that when the big crowd says up, they say down. And when the big crowd says down, they say up. And what happens is they create this little fight, kind of a ripple in the matrix. This is called a retracement. When everything is going up, a retracement is just a small movement that's counter to the underlying trend. Your rule number 3 is designed to help you pinpoint precisely, exactly, where their fight is most likely to fail. This is going to become your entry for the highest probability trend trade because their failure point also happens to be right where the market is most likely to bounce and continue in the direction of the trend. So know who you're fighting with or against is important. My first hour, your first hour, the first hour every day is rules. It is learning the trigger line and Fibonacci rules for when it's okay to trade. We're going to break them down individually, one by one, what they look like, what they mean to you, how to recognize them, and then ultimately we're going to piece them together to create a trade. Everybody in the room can simulate. You can practice. Make a lot of mistakes as a brand new user. Don't put that harness of perfection on yourself. You're brand new. Give yourself a little bit of grace, guys. Make all the mistakes, but post them in the room. Post your trades in the room. Don't hide losers from me. The more you post in the room, the more often you're going to get feedback. The feedback is going to be based on my 5.5 years of reading indicators. I've seen everything. I've broken every rule, guys. I've made every mistake. And if I just see how you're reading your charts, I can help you do it better. So every time you post in the room, I want you to do me a favor. Whoops. I want you to tell me what you saw, and I want you to relate back to those 3 rules. I want you to describe the momentum and how you read it. I want you to describe the path and what you thought it was, and I want you to show me your entry all the way to the exit. And what's going to happen is if there is a chart reading issue that needs a little attention, we'll work through it. We'll talk about it. We'll create a lesson for you right there in the moment. If there was a way for you maybe to reduce your risk a little bit, to increase your profit potential, I'm more than happy to talk about it, and we'll work through that together. Um, and this is kind of a bummer for some people, if you get lucky, if you're making money by fighting everything because you got lucky, guys, it's awesome in the moment. But practicing the wrong trades is creating a muscle memory that typically results in long-term failure. So we're going to keep posting in the room until you can follow those rules, until you can have those advantages, until you feel like there's the edge is there. And try to avoid the temptation of practicing the wrong rules. It's fun in the beginning. Get in, get out, move stops, do all that. But after a day, get it out of your system and start focusing on what's going to make you money long term, most likely. We will simplify. We're going to talk about that high probability trend trade. We're gonna beat it to death, guys. The average person, I think, if you stay focused, momentum will take you 5 minutes to understand. Termination conditions may take a couple days, and typically by the end of the first week, people are showing me amazing entries. And that's average. Everybody's different. It took me longer because I fought everything. I refused to go through this process. Some people embrace it, get it, and are using the plan I'm going to give you, the KISS plan. And I've seen people get funded inside of their first 30 days with those prop firms. So simplicity typically produces the best results. You guys have to learn what looks you're going to commit to. What does a pattern look like? And that's all a high probability trend trade is. It's a pattern. It's a pattern that uses momentum and nothing in the way, and then a little fluctuation on a small chart to define an entry. So the spreadsheet that I'm about to give you is what's going to help you learn to recognize these patterns. This spreadsheet, whoops, it opened up in the wrong window, is 4 tabs. And I firmly believe, and a lot of neurological educators would agree, I don't know if that's a real thing, um, repetition tends to be the key to recognition. Seeing the same thing, doing the same thing, guys. And we're taking that kind of a step further. This first tab is in green, what it looks like to have your rules met, but it's not just a strong trigger. It is a strong trigger, so visually, you're going to know what you're looking for. But it's also the annotation. Why is it a strong trigger? What makes it a strong trigger? What rule does it relate to? And that connection between what the eyes see and what the brain thinks, guys, that's what's going to make your chart reads happen quickly. That's what's going to get you to where you want to be the absolute fastest. So green is what it looks like to have the rules met. When you have all 3 advantages, it's time to enter a trade. Red is what it looks like when the rules are not met. And this is when it's time to sit on your hands and kind of embrace that idea that you don't always have to be active in the market. The next tab is client trades, and this is where I'm scrolling up. Probably over 500 pictures that I've taken from you guys in the room. Momentum, path, and entry, guys. It's a picture of the pattern. It's not a dissertation on victorious trades. It's a picture of the pattern that has been proven to win more than it loses. So use the screen section as a study guide. Go through, look at them, compare them. Talk about the advantages in your head as you look at them. There's the entry sequence, that small chart sequence to define your entry for both longs and shorts. Some of you are adrenaline junkies. You like to jump out of perfectly good airplanes and swim with sharks. There's some stuff on the NASDAQ that's going to help you avoid some challenges that tend to happen there. There is management. I'm going to give you a very basic management plan in the plan that I hand you. You're going to grow from it, guys. The more you learn to read your indicators, the more you're going to see, the more efficiently you're going to manage trades. And that's kind of what this is. It's just bigger thoughts on trades. You're going to see patterns that repeat themselves. And the third tab is where you're going to start stuffing your pictures. When you see the pattern, take a picture, drop it in your trade setup, commit it to memory. As you begin to work on management, post it in the room, tell me what you're thinking, we'll work together. Drop them in the management section. As you begin to see patterns, drop them in there. Who knows, maybe you're going to find the next big trade that I teach a year from now. And then finally, there's trade tracking. This is the one that I neglected in the beginning because I don't know, I didn't want to take pictures of losing trades, guys. I didn't want to post losing trades in the room. My last name is Novak. It was embarrassing. How could I not be perfect at something in my first week, right? Once I started embracing the idea that I needed to track my trades, that I needed to drop a picture, talk about the advantages, and then, guys, most importantly, discuss the feedback from class. I'm not a big fan of telling you that you were wrong. I'm a big fan of pointing out challenges that might keep you from long-term success. So if you go back every morning and commit 3 to 5 minutes, study the trades that you took yesterday, look at them, look at what you wrote on the charts, how you felt about the trades, and then go back and compare it to the feedback from class. Excuse me. What you're going to find is that you're going to begin to see patterns that are repeating themselves, that are bringing you success. You're also going to see patterns not only in the market, but also in yourself that might be hindering you from that success. So 3 to 5 minutes every morning, looking at what you did yesterday, you may find that when the rules are all met, everything is pretty easy. And when you're fighting things, whether it's termination or trend or getting in on the wrong side of triggers, this feedback from class section is going to show you that pattern in yourself. And you're going to wake up and you say, all right, I'm going to avoid trading into termination conditions today, or I'm going to be a little more patient for my entries today. And this is going to pay huge dividends for you. So I'm going to drop that in the room. and then we are going to get going. We're going to have some fun. We're going to learn some rules, guys. Uh, Fill the room with pictures, please. Today is Wednesday. I got sidetracked on news, but I believe today is going to be crude oil inventories at 10:30 a.m., which even though it shows up low impact, crude oil inventories can spike a crude oil market. Be aware of that if you're one of my crude traders. And then let's get into rules. Rules are my lifeline, guys. Rules describe a pattern that has been proven to win more than it loses. Rules help me lose my emotions because I know that anything that wins more than it loses still loses every now and then. And I accept that wins and losses are a part of trading. But if I can only have momentum, clear path, and define my entry, I know that I have a pattern that typically wins 70 to 80% of the time. So my focus is going to be to trade when the rules are met. And rule number one says I have to have strong trigger lines. And remember, this is large chart. The large chart leads the way. That first bar is going to let you know if you have strong trigger lines. It's even going to let you know which way the market is trending. So if the background is green, it's going up. If it's red, it's going down. And the only way to have strong triggers in an uptrend is if all your triggers are green. And if in a downtrend, they have to all be red. But let's talk about what it means to have strong triggers. It's just a look, and that's it. Doesn't have anything to do with those bars. Doesn't have anything to do with Fibonacci areas. Guys, strong triggers means that your small triggers are above and away from the large triggers. Your large triggers are wide, they're open, and guys, there is space between them, like scissors, open, ready to cut. In a downtrend, same thing. The colors match, the scissors are open, the small triggers are below the large triggers are wide. And guys, those open scissors, that's when you can cut. That's when you can get work done. Open scissors, that separation lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum. You're going to hear it every day in this room. Odds favorable momentum. Man, it pushes a market. It can break areas. It can cover mistakes. And guys, when I have strong triggers, when I have clear path, those tails, remember from the refinement, these are where you're pinpointing your entry on that smaller, faster chart. So we're going to use that for a study tool as well. Scissors open. It's the easiest way to remember that, I think. And then when scissors close, when the smalls return to the large, guys, you can't cut with closed scissors. You can take a stab at it, but you can't cut. It's not effective. It's not efficient. And when those small triggers return, guys, this is weakness. This is a weakness of the large triggers. Hey, mama. And when you have weakness, anything can happen up or down. So I go from odds favorable to anything can happen. I go from having that great advantage to having no advantage at all. As a brand new user, you're going to learn and train yourself to insist on that advantage because that's when great things happen, guys. That's where it's hard to stop a market. And this just kind of shows that small separated from the large. This is always your strong trigger look, guys. And the only way that rule number one is ever met. Separation, 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 separation. And there's even a couple of those tails in there, potential entries. When the smalls have returned inside of the large, guys, this is weakness. Anything can happen. Rule number one's not met. And I want you to see something. This is from a couple days ago. Weakness, and there's a reversal in the market. And weakness, there's a reversal. Weakness, the reversal. The one time it reverses without weakness, weakness, there's a reversal, guys. You've got to learn to embrace the advantages. And once you believe in rule number one, you're going to go look for rule number two. Is everybody good on that? Momentum? Do I have some new folks in here learning some lessons right now? Guys, momentum drives a market. Momentum creates its strength. It's a push. It can break areas. Look at that. There's strength again. Colors don't match. Weakness. There it goes down. I don't know, Wayne. I didn't know there was any gold news. Bet you could Google it. I have no idea. There was nothing on forexfactory.com about gold specific, just G7. Guys, once you have momentum, you're going to make sure there's nothing in the way. I don't care how big and bad your car is. If there's a brick wall, you're not likely to get through it. You might every now and then, but not very often. Termination's false, guys. Room to profit targets. That's going to give you the clear path. Once again, this is a large chart. Big chart, slow chart, 1 bar, guys. We're going to use areas on the large chart. We're going to use fibs. We're going to use divergence highs and lows. We're going to use yellow 1-to-1s, magenta. Horizontal lines on a large chart are where the large crowd are most likely to make decisions. These are the areas that are most likely to be tops and bottoms. These are the areas that are most likely to disrupt the movement of the market. These are the areas sometimes they break, sometimes they reverse. These are where decisions are made. So if decisions are made at areas, to define an area as a termination condition, first we want the market to get to it. So price reaches the area, whether it is resistance or support. Your price bars reach that area. If you reach resistance and your large and small triggers remain below resistance, or if you reach support and your small and large triggers remain above support, triggers don't break the area, guys. These are termination conditions. This is something that could reverse the market. This is something that could create a big ugly bounce. This is something that may break. And the reality is, and the truth of the matter is that you'll never know what the reaction of the large crowd is going to be. So if price reaches an area, all you have to do is ask yourself, where are my triggers? And if they remain below resistance or above support, guys, rule number 2 is not met. No trades into the area. This is going to be the biggest patience piece for most of you, because you're going to find that termination conditions work. That if you scroll back, you're going to see all of these bounces coming off of areas, coming from areas, going into areas, bouncing off of areas, and yes, even defining consolidation. So we're going to use rule number 2 to simply say, hey, my advantage is gone, no more trades into the area. Going to wait for a clear path, guys. And a clear path means that price has not reached an area, and it also means that your small and large triggers have gotten away from whatever area may have been problematic. So if price reaches resistance, once your small and large get above resistance, resistance is considered broken. Your path is considered clear, and your path remains clear until price reaches the next area. The language never changes. When price reaches the area, once again, you're going to wait for the reaction, no trades into it, and if it reverses, it produces that momentum and it gives you that clear path. And guys, there's one of those potential entries. So you're going to get clear paths. This is called a breakout of Fibonacci when small and large get above. And you're also going to get a clear path from that reversal when the triggers roll, when the colors match, when the separation happens. Clear paths are amazing. When you couple them with momentum, guys, these are going to be the easiest trades you ever take. These are going to be the highest probability trades that you ever take. The tails on the large chart are those potential entries on the small chart. And when rule number 1 is met, when rule number 2 is met, guys, this is where you're going to find the easiest money, the most effortless trades. Usually the trades that go to your targets the absolute fastest, guys. And this is your look on a large chart for when rules 1 and 2 are met. And this is what it's going to be every time. Is everybody good with that? Large chart terminations, where decisions are made, you don't have to trade into them. It's cool to be patient. Good. There is one termination condition that's going to happen on a small chart, guys, and this is 3 divergences. Divergence, anytime those 3 cyan lines print from a low, anytime a magenta line prints from a high pivot, it is a loss of momentum in the market. And when you have a loss of momentum, it's hard to continue forward. When you have 3 losses of momentum, we're going to consider that a termination condition. It happens on a large chart. It happens on a small chart. You're going to see it on the small chart first. Guys, your small chart is going to give you a heads up. It's going to show you the change that you can't see happening on that big broad stroke of a brush. So if I have odds favorable momentum on the large chart, if I have a clear path on the large chart, but I see three divergences in the same price range on the small, guys, I'm going to pump the brakes and I'm going to wait for that path to get clear. So rules 1 and 2. Large chart has strong triggers. Large chart has no termination conditions. Now it's time for the refinement process. It's time to pinpoint where the market is most likely to continue. It's time to identify where that small crowd is most likely to fail. So the entry is pretty exact. You're going to use a limit order. You're actually going to wait for the market to come to you, and you're going to use a limit order to buy or sell a pullback. That's that retracement, that little down push when everything says up, or vice versa. And you're going to do it at an area. You're going to have that limit order waiting at a fib, at a mid band, at a yellow 1-to-1. But the key, guys, is it needs to be inside of triggers. So the one breath version of this is you're going to use a limit order to buy or sell a pullback at an area inside of triggers. Inside is the key word there. So when the rules are met on the large chart, when there are strong triggers, when there is no termination conditions, inside of that bar, you're going to have a reversal bar that begins the fight. You're going to have a pullback, typically somewhere inside of the triggers, guys. Your large triggers and your synthetic triggers. Synthetic triggers, these stepped red ones up here, it's just the large triggers from the large chart superimposed. And these trigger lines define where the retracement, where the pushback is most likely to occur. And then it's the areas in the retracement zone. I like that phrase, the retracement zone. This is where these up bars are most likely to go. The areas in that retracement zone define where the market is most likely to bounce and continue with the trend. So it takes one bar on the large chart, guys, to know that rules 1 and 2 are met. Inside of that one bar, you're going to see a reversal, a pullback, and a bounce in a successful trend trade. So defining where the market is most likely to continue, guys, begins with the reversal bar. The reversal bar is not your entry. The reversal bar is actually a loss of momentum. And that loss of momentum is what we need to get back to our entry. So the reversal bar begins the pullback, not your entry. But when it happens, or even before it happens, you're going to start looking at these trigger lines, large and synthetic. And you're going to say to yourself, man, price loves to come back to these trigger lines. This is where the retracement is most likely to occur. But trigger lines are not my entry. I need something bouncy. I need a fib. I need a mid-band. I need a yellow 1-to-1. But it has to be inside of that retracement zone. And guys, this is a magical moment. There is a mid-band running through those triggers, large and synthetic. You're going to activate a limit order 2 ticks below it. And you're going to say, come get me, small crowd. You have done all you can do. Reversal bar, triggers, area. And guys, that little blue shaded box is where the market is most likely to bounce and continue with that downtrend. Any line beyond the triggers, and I call this the wrong side of the triggers, because if triggers define the retracement zone and areas define where the bounce is most likely to happen, once you get above those triggers in a short trade, guys, you've lost your advantage. The edge is no longer present. You don't know if, when, where the market's going to continue down, so you just learn to ignore these lines on the other side of the triggers. In an uptrend, same thing. The rules say wait for the reversal bar and then define where the retracement is most likely to occur and then pinpoint with the areas inside of those triggers where the market is most likely to bounce. New users, you'll get to a point when the market is trading about right here. You're going to start looking over and you're going to start looking at those triggers. You're going to start looking at those areas and you're going to be calling your shots before you ever get the reversal bar. So reversal bar begins the pullback. That's the loss of momentum. You define where the pullback's most likely to go. Top of the triggers, bottom of the triggers. That's your retracement zone. And then you're going to create that window of opportunity, as I like to call it. From the highest point of support to the lowest point of support. Guys, the blue shaded box shows where the market is most likely to bounce. So trigger lines define where the market could push down. Areas inside of triggers define where the market is most likely to bounce. Does that make sense, everybody? And because I don't know if it's going to be the high one or the low one, the limit order goes just above the highest point, the area closest to the reversal bar. Because you have to remember the large chart is screaming to the upside. And the large chart has nothing in the way to create a bounce, guys. And we're not going to stumble over a couple pennies to save a few dollars. Anything below the triggers, this line, this fib, hanging out in the middle of nowhere, guys, this is where your advantage is gone. This is where rule number 3 is no longer in play. This is where you have no idea if the market's even going to continue up or if it's going to produce a bounce. So by defining where the market is most likely to continue, areas inside of favorable large triggers, you have also defined where the market should not go if this is going to be a winner. And guys, that's where your initial stop is placed, 4 to 5 ticks beyond those triggers. Because if they break through the retracement zone, if they break through the areas within the retracement zone, the advantage is gone, and it's better to take a small loss than to embrace hope. Hope rarely is a successful trading plan. We're talking about a pattern right now that typically wins 70 to 80% of the time. Any math geniuses in here? How often do you suppose, every 10 trades, how often do you suppose they're going to hit that stop? Anybody good at percentages? Clearly I'm not. We learned that yesterday. 2 to 3 times, guys. 20 to 30%. It's okay. It's okay to take a loser. It's okay to get stopped out. It's okay to have a loss, guys. This is a cost of doing business as being a day trader. John and I were talking about that this morning. He goes, man, I'm trying to avoid this loser, but it's keeping me from taking the winners. Take your patterns, follow your rules. Be willing to get stopped out a couple times every now and then. But if you go back, if you take a loss and you go back and you say, I did have momentum, my path was clear, my entry was well defined, guys, you're gonna shrug it off and go to the next trade. You know that it's a part, and you don't get to pick when you take your losers. So the pattern that has been proven that you're going to prove wins more than it loses, because you're going to go back and study it. You're going to go back historically, and when you have momentum and path, you're going to circle those tails, guys. And when you circle those tails, you're going to go back to your smaller, faster chart. You're going to see where that circle ends up. And if it ends up at an area in the retracement zone, guess what? That was a potential entry, guys. That's something that you could have taken, and there may have been great results. So you don't even have to take a trade to go back and study this pattern. You could do something clever, like open up, what is this, crude oil? We'll look at a couple different ones. This one has the beginning of momentum and everything down. This just happened. I don't know if that produced an entry or not. Sure looks like it came right back to that area inside of the triggers, right at that synthetic. That's right at the beginning of it. A lot of you guys probably caught that one. And now it's running down with all that momentum. This is one of those trades where it had the potential to break. The small triggers broke through, the large triggers didn't. And then there's a first bounce, there's a second bounce, and then there's 3 divergences, and that's the one that killed it and sent it shooting up. Kind of crazy, right? And you guys are just going to be able to do it. Here's another one. I've got the momentum, the potential to break, and it pulls right back to resistance inside the triggers, guys. You can do this 10 days back. 10 days back, you can circle these tails. There it is again. And then 3 divergences ruins your good time. Does everybody see it? You may not get it day 1, day 2, day 3, but if you keep it focused, guys, and you leave it simple, you really will be floored at how quickly this becomes second nature. And once this becomes second nature, guys, that's when you start seeing more and more. That's where you start finding more opportunities. So the easiest way to make it easy, that's a little repetitive. Go take pictures. Go take pictures of strong triggers the same way I showed you. Describe why they're strong. Create that correlation between your eyes and your brain. So the chart reading 101 thing is is designed to get you focused on looking at your large chart, reading the large chart, getting those large chart advantages and really committing to them because it's such an advantageous moment when you have momentum and path. Take pictures of strong triggers, that's your commitment to take the trade, but go take pictures of weak triggers, and that's when you're going to choose not to enter. Do the same thing with a clear path, with a termination condition. Get them in your spreadsheet, guys. I've given you a huge head start on this drill. Go put your pictures in there or start a new one. And what happens is if you study these every morning, you're really committing to those first two rules being met, and you're really committing to the recognition. And what you'll find is that in a live market, with a little bit of study, you'll be able to say instantly, I have momentum, I don't have a clear path. And that's how long it takes to read a large chart once you get these two concepts in. As you're taking those pictures and learning those pictures, the second document is what we call the high probability trend trade checklist. And this is nothing more than the best of the best of the best way to take this trend trade, guys. And it starts with what we call a strong top or bottom. It's not mandatory for the high probability trend trade. If those three rules are met, you don't have to have a strong top or bottom. But if you do, it creates warm fuzzies. It ups the advantage a little bit. So a strong top or bottom, here's your definition. A strong top or bottom is a no triggers through termination that reverses the market. So first it's a termination. Price reaches, no triggers break. And then it's a reversal, large go from green to red. Now it's a strong top. Now it's a strong bottom. Both lines of the small must not break above or below. Guys, the strong top or bottom is also rule number one for the medium probability, those potential to break trades. A strong top or bottom is rule number one for an HVA trade. It's rule number one for a momentum trade. And it creates a really awesome advantage, but not mandatory for the high probability trend trade. Your checklist is going to ask you about momentum. Do you have it or is it missing? Guys, if that's a no, you should stop going to the next one. Just it's okay. Pump the brakes, new users. It's going to ask about termination conditions. And this picture shows you what it looks like to get a clear path from a breakout, guys. If price reaches support and the triggers remain above, this is your giant waving red flag saying, guess what? No more trades into the area. Don't know what's going to happen. When the smalls and large get below, there's your breakout, there's your clear path. This is what it needs to be for the brand new users taking the high probability trend trade. But then once you can identify these two, once you know the difference, it opens the door for number two here. And this is what we call a 50-50 look. And a 50-50 look simply means 50% of your triggers have made it through the area. 50% of your triggers have not. Pretty clever, right? As long as you have strong triggers, as long as you have that odds favorable momentum, this fib has the potential to break. But it's not broken yet. It's not a clear path yet, which means you got to be a little more assertive on your management. This potential to break trade relies on that strong top or bottom. And then it's just going to have you defining your entry, guys. And every time I write inside, I try to highlight it. I try to make it stand out. And when you're learning entries, guys, if you learn this phrase, area inside of triggers, it's going to make it easier to pinpoint where the market is most likely to continue. The second page of this document is just the checklist, 3 or 4 of them together, print it out, put it on your desktop, police yourself. And even more importantly, guys, write these rules. Every time you take a trade as a brand new user, whether you followed the rules or not, take the time to write the rules. Remind yourself what you're looking for. And yes, no, yes, no. Write that on your chart. Strong triggers, yes. Strong triggers, no. And what you're doing is you're kind of reaffirming the commitment that you have to following rules. And you'll begin to know what probably went wrong with your trade long before you have to drop it in the room, because you'll say, oh man, I traded into a termination condition, or wow, that wasn't momentum. And you'll find that this is going to keep you out a lot of stuff. It's going to keep you focused. It's going to give you something to write on your charts. And I think the best thing about it is nobody's ever been able to use it truthfully and show me results under 70%. Most of them are closer to 80, 85. And that's kind of the um, the segue to the KISS plan, guys. The KISS plan. Was there a question, Todd, about strong tops and bottoms? Definitely not a strong top. Not a strong top, Todd. We'll talk about it in just a second. Um, and we'll talk about why, and we'll talk about the recipe when we get to your chart. Um, it'll be a good lesson. It'll be a good lesson. Guys, this KISS plan that I'm giving you, this is like your foundation plan. This is your bedrock. This is the one that's designed to optimize your chances of success because that's what creates confidence. Guys, this KISS plan is designed to help you learn to read your indicators, but give you the opportunity to still get paid a little bit while you're learning. So through simulation, study, class feedback, and continuous practice, you're going to create your own plan. Everybody does. I don't think you need to, but everybody does because people see things differently. It's no different than attraction. It's no different than your taste buds. Everybody's different, guys, and what's easy to me might be difficult to you, and what's difficult to me might be easy for you. So you're gonna find your way, but it's gonna be based on your experience reading the indicators, and this is designed to get you there ASAFP. There are two things you have to know before you sit down to trade, and you're not on simulator. If you are on simulator, you're working through these things. You're learning to trust these things. You need to know why you'll enter a trade. And the easiest rule and the safest rule for new users is I will enter a trade because my rules are met. Because my rules describe a pattern. That's it. The pattern repeats itself daily. And this pattern is testable, it's verifiable, it's repeatable, and most importantly, I have proven to myself that this pattern wins more than it loses. That trust is what makes sure that I enter the market every time the pattern is true. And that trust also, it lets me know that this isn't a 100% win trade. This is a trade that loses 2 or 3 out of every 10. I don't get to pick which 2 or 3 lose. I have to be consistent on my rules. I have to focus on the execution. But because I know that I could lose any trade that I enter, I don't get as emotional about it. It's a cost of doing business, guys. And when you're following a pattern that's been proven to win more than it loses, it really will pull the emotions out of trading. I also have to know why I'm going to exit my trade. And exiting trades, you'll get to the point to where they're either taken at profit targets or when the advantages that you had to enter the trade have gone away prior to those targets being reached. So if I enter a high probability trend trade and it goes 4 to 5 ticks beyond the triggers, I'm going to exit that trade. I'm going to take my loss and I'm going to wait for those next advantages. If I enter a high probability trend trade and 3 divergences print, I'm going to say to myself, I've lost my advantage of a clear path. I choose to exit this trade. Until you can do that, and it takes chart reading to understand that. You have to go into the trade knowing 100% the advantages that got you in so that you can 100% exit that trade if something goes away. In the beginning, that's a little difficult to do. So the same way we've talked about entries, we've defined entries, we've made them very mechanical and very emotionless and very if-then. Guys, your management for the brand new user is typically the most effective management if you do it the same way. This management plan in the KISS plan is based on 2 contracts. And each contract has a role. The role of the first contract is going to be to help you focus on getting paid. The role of the second contract is going to be to help you learn to trust that large chart. And when your large chart is screaming in the direction of the trade and there's nothing in the way to stop it, you're going to learn how to hold for bigger, more profitable moves. But until you can do that, guys, this KISS plan is going to keep you focused on getting paid, and it's going to help you learn and trust stop placement. And it's very mechanical, and it's very if-then. And I don't give trading advice, but if my kid was a brand new trader, I would tell my kid, follow this plan until you're comfortable reading your indicators, because this is a plan focused on getting you paid. Because dictated, and it begins with entering 2 ticks below resistance inside of triggers for a short trade. This is the best of the best entry. This entry reduces risk. It increases max profit potential. So if my entry is 71.34, my stop is at 71.49, 4 to 5 ticks beyond the triggers. Not because this is where I feel safe, not because that's how much I'm willing to risk, but because this is where the market should not go if this is part of my 70 to 80%. You're going to know your risk before you ever enter a trade. You'll be able to, even when the market's coming down here, haven't gotten a reversal bar, you're going to say, yep, that's where my stop goes. And you're going to have to decide that you're cool with $150 per contract, because if you're not, it's probably better to not even take the trade, because if you put a stop at areas inside of triggers, it's likely to get hit. If you put it in the retracement zone, it's likely to get hit, guys. And there's nothing more dejecting than calling your shot and taking your perfect entry and not trusting the pattern, putting your stop where the market may retrace, getting stopped out, and then watching it run. And man, they'll get you high tick just to piss you off. They have cameras. Targets are predefined, $100 and $200. Some of you are already scoffing. $100 trade, that's nonsense. There's $150 worth of risk. Well, risk typically goes away quickly, guys. And if you don't get stopped out, you're going to get a reversal bar printing in the direction of your trade. And this is where you're going to define where the market should not go. You're going to say, okay, it is now going down with momentum. It's now going down with a clear path. It's now going down from the area inside of favorable large triggers. This confirmation redefines where the market should not go. Your new stop is 2 ticks above it, and now you only have $30 per contract in this trade. Targets are still at 100 and 200. And guys, you've almost hit your first target on the reversal bar that reduced your risk. That's kind of a good feeling. If they don't come get you for a small loss, it means you just made $100. If price reaches your first target, guys, that first contract is automatically removed. Those funds go into your account. Your palms stop sweating, your heart stops racing, and you're going to move your stop to break even. Notice that I didn't say you're going to put your stop where the market should not go. We're done with that. Now you're just going to protect your investment. The second contract is designed to get you to trust that large chart, to believe that when your large chart has this much momentum and absolutely nothing in the way, it's more likely to go down. The odds are favorable for it to go down rather than come back and get you. So you're going to sit there with nothing to lose and money in the bank. And if it goes to your second target, it's $200 from your great entry. That's a $300 trade. That is a $300 trade over the course of 2 or 3 minutes. That is not a $300 day, unless you stop trading. And if you stop trading at $300 a day, guess what? You're better than most traders. That's a $75,000 a year. Most traders chase $1,000 every day because I need to be a millionaire and I'm not going to get there on $300 a day. And they end up losing all their money because they start taking the wrong trades because they're not hitting these lofty goals. Guys, it's the consistent money that produces results. It's the ability to get paid every day, to have the highest probability chance of success. And throw in one more $100 trade, guys. You're in 6 figures. Learn how to get paid first, and then you'll learn how to get paid bigger. Base hits pay bills. Ron posted in the room. I'm gonna put it out there. Ron doesn't take any trades over 11 ticks. That's about $110 a trade. Ron said he cleared $167,000 last year on never getting paid over 11 ticks. And why? Because Ron, I'm going to air all your dirty laundry, Ron. Because Ron insists on momentum and a clear path. And once he learned the high probability trend trade, he discovered a way to get paid based on this concept rather than taking the high probability trend trade. Guys, this is not your get rich trade. This is your go see your next get rich trade. So one of the things I do every day is I drop this zip file in here. And inside of the zip file is the chart reading. It's the high probability trend trade checklist. It's the PowerPoint I used to teach. It's the KISS plan. It is a rundown of the pictures that you can take. I'm going to say that you should take every time you take a trade. Pre pre-trade, making sure your rules are met. Study it after the trade. During the trade, after the trade, no trade. Guys, snap pictures like you're getting paid to do it. And then also in there is this. This is the trading plan, or not the trading plan. This is everything that we talked about for the last hour. This is how I teach, what I teach, why momentum and path is so important to you. This is the rules that we discussed, the charts to find them on, the indicators you'll be using to find, the advantage of momentum broken down and shown in a picture, the same thing with a clear path, defining your entry, all the way down to how to study it, guys. Everything you need to be successful with the software has just been laid in your lap. Everything that you need to be successful with the software is now in your hot little hands. The only thing I didn't give you is experience. That's the only thing I haven't figured out how to drop in your lap, guys. Experience, repetition, time in the saddle, time on the pond, whatever you want to call it. Now it's up to you. Are you going to do the work, guys? Are you going to learn the rules for when it's okay to trade and commit to following the rules? Are you going to take advantage of the educational process? Are you going to ask a million questions because you can't ask too many and get all the feedback that you need? Are you going to stick to a plan? Are you going to keep it simple? That's on you. As we go into the second hour, we're going to do this. You're going to drop a picture in the room. Todd, we're going to use yours here because this is a great example. And we're going to talk about what you did. And I'm going to read the words that you guys write on the chart. And Todd, you start off by saying, hey, this is a strong top. And this opens the door for an amazing lesson. So a strong top or bottom, Todd, is first a termination condition. And it has to have no triggers through it. So it has to look like this. From resistance, none of the triggers break through resistance, and then it reverses the market. From support, none of the triggers break support, and then it reverses the market. So if we go back to your picture, we realize that those small triggers absolutely smash through the area. This area had the potential to break, but it was only potential. I see that you went long here. And it's only large chart. Thanks, Pete. It's a large chart because large charts define termination conditions. So what happened on the long? I see the entry. So you got stopped out somewhere down here. I'd love to see that trade too, Todd. I don't see the exit from that one. And then you go short. And you said that you got stopped out. So, okay, so it may be that time thing. And that's okay. So let's go through your short trade. So on your short trade, did you have strong triggers? And I think you said yes. You said that you had momentum here, right? Cool. I'm going to give you my take. Do with it what you will. And I'm going to go back to the picture that I used to teach. In order to have strong triggers, and this would be to the downside, small triggers are down and below the large triggers. Large triggers are wide. And that's one of the biggest keys here. Large triggers need to be wide. And at the time of your entry, your large triggers are still green. So you've got green large and red small, which means that you don't have the best look of momentum here. Does that make sense? This is strong triggers when they're wide, when the colors match. If the colors don't match, I can't call it strong triggers. Cool. And then when we ask about the clear path, and what does that mean? That means that both small and large triggers are below that area. And you're just not there yet. So not only are we working without the momentum that we really want, but we're also working without a clear path. And it's not even one of those 50-50 trades because it takes momentum to define a 50-50 trade. So we're already giving up the first two. If you are going to take an entry, some people might take a shot here, but I want you to see something on your entry. And this is one of my favorite things, is let's write the entry rules. But, okay, look like a clear path on the small chart. Oh, thank you for saying that. The large chart, Todd, is going to define direction. The large chart is going to define momentum. The large chart is going to define areas. Terminations come from the large chart. So what happened is you got lured into the siren song. You said, oh no, my small chart is going down. I should probably go down with it. And you ignored, not intentionally, I'm sure, that you didn't have strong triggers. And you omitted a clear path. And even rule number 3 says pull back to an area. Let's go all caps on that. Inside of triggers. And that's a no as well. Because the only area inside of triggers is right there. So what you did is you just jumped in. Can we agree? Small chart was going down, you had a clear path on it, and you jumped in. So I'm going to teach you how to have a fighting chance. Just a fighting chance. This trade is a jump the fudge in trade. Small chart was down and clear, and I hoped it would go. That's cool, right? Those work sometimes, Todd. The jump in trades typically work best with odds favorable momentum on that small chart. At least give yourself a fighting chance with that momentum. Your smalls are above the large here. So you don't even have momentum on the jump in. Does that make sense? If you had jumped in right here and said, man, I'm going to try to ride that momentum down, I love it. And then this reversal bar says, hey, guess what? Momentum is gone. I could be like, Todd, that's awesome. Great look. I dig it. Nice job. Over here, you're void of momentum. I love the aha moment. So over here, you're going to say, hey, if I'm just going to jump in, I'm going to wait for a little momentum. And I guess if you got stopped out, it never gave it to you, did it? And that's when it bounced back up. Great lesson here, Todd. Does that make sense? So this goes back to another thing. Why do we name trades? Why do we name trades? Because if it's a high probability trend trade, you know that that's not it. You know that's not a high probability trend trade, so those rules don't apply. It's not a 50-50 trade because you don't have the momentum you need for a 50-50 trade. It is literally a jump the fudge in trade. Jump the fudge in. If I'm going to jump in, I'll have a better chance of winning if my small and large chart have momentum. Does that make sense? So we went from thinking that you had a trend trade that kind of, they did you wrong. And now what we know is that if you're just going to jump in, man, there's a way to have a little more advantage. You're getting there, man. You're doing great. You're doing great. Keep doing this, though. Keep going through this. Try to name your trades. And as we get into the second hours, ladies and gentlemen, this is what we're going to do on the charts that need this done to it. We're going to look at it. We're going to talk about it. If there's something I can help with, I'm going to help with. But every chart that we go back to, I will, without question, go back to momentum, path, and entry area, because what you're going to find is that when path is clear and momentum is strong, the trades become easy. That's a good example of it. So I'll be back in about 5 minutes, guys. I'm going to go stretch my legs. When I come back, we're going to click on the minimal pictures that were posted. You're welcome, Todd. I love this. This is my favorite part of the day, is looking at pictures and talking about what I see and talking about what you see. And you do such a good job of telling me what you're thinking that it's easy to go through and it's easy to start talking about what you saw and how maybe we could see it a little better and what you did and how maybe we could do it a little better. And guys, this is what makes next gen education work. It's the feedback. So it takes a set to drop a losing trade in the room. It really does. And it takes a set to accept the feedback. But I feel like you move forward faster if you embrace that process. I love every one of them. That was a pretty big spike, Ron, wasn't it? Went berserk. 10:01, 10:05. You guys want to see something that's pretty awesome, though? It's raining, Peter? That's okay. That probably won't affect the market. It came from support with no triggers into it during the spike. It went directly to resistance and during an emotional spike, and it pumped the brakes right at support. All of this happened within a minute. This is one of my favorite things, guys. If you don't see the advantage of knowing where highs and lows could be, guys, you're not the only people that know. The people that control the market know where these numbers are. It's freaking amazing. It's like having a crystal ball, knowing where you shouldn't go long, knowing where you shouldn't go short, where you're likely to get stopped out. And guys, the rules are designed to make it so you can take advantage of these key areas. I love that. I've watched the market on FOMC day go batshit crazy for, oh, I don't know, 20 minutes. And in the 20 minutes, there were terminations, there were reversals, there were high probability trend trades, and the only difference was that it was too fast to trade. Yeah, OPEC day in crude oil, when it said high impact news, the market may go crazy, and everybody just kept getting run over. They didn't believe it because I can't respect high impact news all day because then I don't get to trade. Some days you just don't get to trade. All right, guys, I'll be back in a couple minutes. When I come back, we're going to look at the rest of the pictures. We're going to talk about charts. Post any and all questions that you have. The last hour of today, again, especially if we don't have a lot of pictures, will be dedicated to helping you guys through TradingView, those of you that are making that transition. I'll be back in a few, guys. Go stretch your legs. All right, y'all, here we go. Second hour. Um, this would be what I lovingly refer to as an untradeable bounce. Price reached an area. I didn't know what the reaction was going to be. I didn't know if it was going to break. I didn't know if it was going to reverse. And guys, look at the nonsense on the small chart. That's that untradeable bounce. That's that indecision that you guys can avoid by learning and respecting rule number 2 a little bit. So I'm going to scroll up to the very top and look at some of the pictures you guys have posted today. Remember, I am not the trade police. My job is to talk about what I see, to talk about those advantages, to give any feedback that I know how to give. 1, 2, 3, 4. And see what we can do. So Pete gets us going, and I love this. Pete says 3 divergences, says no more shorts. Guys, when it's a termination condition on the small chart, it might keep you out of a high probability trend trade. When you see 3 divergences on the large chart, guys, that's something big. That is typically an indication that the market's going to have a pretty good run the other way. Very often it happens. And there it is. Odds favorable, breaking everything. Guys, this is one of those things. And Todd, this is a great lesson for you. If you're just going to jump in. So what Pete does is Pete says, man, I'm going to let it get above that fib, not trading into it, but he's got odds favorable momentum on both charts, and he jumps in, and that thing just doesn't stop. Beautiful trade, Pete. Really nice. Momentum and path, creating easy wins. And then everything says down directly into a termination condition, right? Odds favorable. It was not a clear path once it broke the fib because it went directly into a termination condition. Guys, your path is only clear if you have not reached an area. So does that make sense, everybody? Price reached Fibonacci support. None of the triggers broke through. Pete takes the trend trade entry, makes a couple ticks at 10, and protects himself. And let me talk about why the management is aggressive here. And it goes back to, the idea. Let me pull this up. That Pete is looking at his chart and he's talking about advantages. Pete's looking at his chart. He's saying, man, I have momentum on both of these charts. And I have the perfect low risk entry area. The only thing that I don't have is a clear path. And Pete knows that Pete knows he doesn't have a clear path. He says he has a clear path from the top, but he doesn't have a clear path here. Pete says with this much momentum, with that little risk, I'm willing to take a shot. I'm willing to take a shot on the retest. And you'll notice that he gets paid quick, aggressive management, and he protects his investment quickly as well. And guys, if you're going to trade into a termination condition, that's a choice only you can make. But once you get rid of one of these 3 advantages, that's when you start to manage a little more assertively. That's when you say, man, this may not be a home run. Let me get a couple ticks in the bank. Let me protect my investment. And that's exactly what Pete does. So I'm not going to bust his chops over trading into a termination condition. He made that decision. But Pete's also got a wealth of experience behind him. If you're a brand new user, this is going to be more difficult. That is crude oil. Better Dad, it's pretty easy. Anytime it's like under 100, lately, it's crude oil. When you start getting into the thousands, you're going to see it as the S&P or gold. Nice trading, Pete. Termination. Everything starts to roll. Pete, great patience. Yeah, if it's Pete, it's crude oil. So guys, I want you to see this. And I love this. Pete knows that this area could reverse the market. It's a termination condition. Where's my call out? I'm about to blow my, there it is. Pete says this is a term, no longs. And that's the first part of the thought process. Well, I can't go long here. And he knows that small charts show the change that you're not going to see on that large chart. Pete gets one loss of momentum right at the fib. And then look what his small chart triggers do. His small chart large triggers roll. They go from green to red. So that's a small chart reversal, right? And then he's got smalls below the large and space between. So his small chart shows the change that he's not seeing yet on that large chart. His small chart says, hey, Pete, that termination's probably going to be good. We are probably heading down, and you're going to see it over here first. Pete, great patience. He gets in with that odds favorable momentum. Remember, Todd, if you're going to JTFI, let that small chart have momentum. And again, he just gets paid on the way down to the area that could create a bounce. Pete, really expert trading today. Nicely done. Great patience on your trades. Did you switch to decaf? Because you're letting areas break and you're waiting for triggers to roll? I love it, man. You're killing it. And then, Todd, this is the one that you took. How did you get stopped out if Pete won? It's a weak top. He enters beneath the fibs, jump in with momentum. Probably should have exited here with a loss of momentum. Chose not to. Turns into the trend trade. He adds on. Todd, he got paid at your entry. Didn't he? You said you got stopped out. I'd love to see the rest of your trade, Todd. I would be curious at how you got stopped out of this trade because it streamlined down. What happened on your chart? Maybe I'm reading it wrong. Hold on. 62, 63, and your stop was at 87, and it never went anywhere near it. I would be curious to hear what happened in there. You shouldn't. If is it your markers? Show me a picture. Go back and show me a picture. You shouldn't have to reload historical data consistently throughout the day. Is it your markers that are off? Let's see. Where is that one? Price markers, black, scale justification to the right. Execution marker size. Because I've seen that before. I think what may help, if I'm not mistaken, and I could be, and I would encourage you get with Jason, because Jason probably has a fix. But if you go to time and language, date and time, sync your clock. I don't know why that's sticking in my head, that it may be a help. I want to say that I had the problem once and John or Jason fixed it for me. But don't be afraid, guys. If there's ever anything that doesn't feel right on your charts, go to Jason. Let him look at it. Let him help. And then Todd, you want to do me a favor and scroll back? Let's see where you got stopped out. Let's see what happened in that trade because there's probably some great lessons in there. Because absolutely nothing changed. It only got better all the way down. I'd love to see how it got you. $62.63. It got you at $62.75. Oh, so you moved. Never mind. I've got the picture, Todd. You moved your stop to $62.75. Well, no, I'm not sure how that got you. $83, $79, $75. Unless, hold on. No, I'm not sure, Todd. It's a mystery to me, but I want to figure it out. Um, if you want to go back and retake a picture of that trade with your markers on it, maybe we can do a little detective work and figure it out. Pete's looks so different than yours, though. You guys don't look the same at all. I would get with Jason, Todd, and just say, hey, do me a favor, give me a tune-up. Have you changed anything on your charts, Todd? Have you changed trigger lines? Have you changed? So this is the current one, and let's pull up my crude oil real quick. This is the S&P, but how's that for consolidation? So there's mine. He looked at it 2 days ago. You're using NinjaTrader data? It's not delayed or anything? I can't see your account. Is it Sim? I want to make sure. We're going to work through this. Do you have live data? So if you look at your chart, does it look like mine right now? There it is right there. We look really similar here, I think. Okay, so if you don't have live data, that's going to be a big part of it. If you're on any sort of delay, it's going to be hard to trade. But we look pretty similar here. Up to 62.35 and a bounce. No, we don't. We look very different. Hey, Todd, what contract are you in? Is it 0725? Or is it 0625? I can't see it. Okay, it is July. All right, I'm going to give you something to do. Are you relatively computer savvy? And guys, this is what the classroom's for. The classroom isn't just for, yeah, okay, me too. So you'll probably be okay. I need to get Chris to fix this. Trading guides, reviews, affiliates, community. What did he do to me? Need to switch computers? Trading guides. That's not it. Sorry, I need to get my computer guy on this to fix it because it's not showing up. So we could walk through it together if you wanted to. Todd, and guys, I appreciate your patience here. I want to try and get this fixed. Um, so Todd, um, use affiliates community web trade. I don't know what web trade is. Prices support. That's not it. All right, something's missing. Do you want to do this with me? I'll show you exactly what's a pretty good fix and usually very effective. Cool. Guys, this is a great lesson for you guys too. Todd, you will have to disconnect from your connection to make this happen. But you're going to go to Tools, and I'm going to show you pictures. I'm going to drop pictures in the room. I want you to go to Tools and Database Management. That's going to be the first step. And then from Database Management, there is Reset Database and there is Repair Database. And you're going to have to reload NinjaTrader. But if you hit Reset and Repair, what this is going to do is this is going to look for glitches in any data that you have. And what it'll do is a lot of times when you come back, it kind of fixes the problems that you've had. And that's a good one to go to. And that's kind of a quick fix. It takes a minute or two. You will have to reload NinjaTrader after you do it and reboot it. But that's my go-to when things don't feel right. Something seems wrong with your data, but if it's not live, that's probably the biggest one. Yeah, I know, right? He's taught me well, Joel. If it's not live data, that's probably the biggest challenge. But guys, these are the things that the longer you spend with the software, the more time you spend with the software, the more you just kind of catch on to. I'm not a tech guy, Todd. I'm not a tech guy, but I've broken everything, so I know how to fix it. Typically, if it doesn't have a spark plug, I struggle. All right, let's keep moving on. See where we're at. Woo, crude oil. There's your inventories. That was a pretty good spike. All right, Miss Jen, let's see what you did. Jen, when I opened my computer today, there were 2 kangaroos on a beautiful beach, and I thought, that's probably Australia. I bet Jen's going to take a short trade. So not a strong top. I agree. And then Jen just jumps the fudge in, right? There it is at the bottom of that bar. So she had the momentum. She had the momentum, and she just jumped in. And guys, her momentum trade failed. She lost momentum. It turned against her. It went up. But where did it go to? It went right to areas inside of triggers. And this is one of the things, guys. And Todd, this will be a good lesson if you're doing those jump ins. When you jump into a trade, if the conditions are perfect for a trend trade, very often that failed momentum trade becomes one. And she knew it and rode that thing all the way down. And then she jumped in again and she said, I didn't mean to jump in. Let me get back out of that one real quick, and gives a tick back. Absolutely beautiful trading, Jen. Nice job. Nicely done. Let's see. Go to the next one. And guys, if you have questions about anybody's charts, feel free to ask them. I took this picture. It was a weak top. It was a 50-50. That's the rule broken. Remember I said strong tops and bottoms are mandatory for those 50-50 trades, guys. It increases the likelihood of success. So it's coming from weakness in the 50-50. And then in these 50-50s, guys, your KISS plan tells you that 1 divergence isn't that great. 2 divergences is worse. 3 divergences is horrible. And that market rocketed up from there. And then I was just looking at Pete's name when I was doing this. And I bet Pete went long right about here after the 3rd divergence on a 50-50 failure. Did you get that one, Pete? That's a Pete trade. That's saying, man, I can't go short anymore. Maybe I'll find an opportunity to go long. That had you written all over it. All over it. But I wanted to share that one because, guys, when we talk about gauging advantages, potential to break is missing a clear path. And if you don't have a clear path, don't start sacrificing momentum, right? You're going to embrace those advantages. You're going to talk about those advantages. All right, Pete. Market reversal out of nowhere, which is a weak top. It is smalls below the large, but the large are up. Not the best look. You do take a short right into support with everything up, and it works. I have no idea why you took that trade. Doesn't meet Nexgen rules just based on experience. I can't even find a reason to take that trade on the way up and not the way down. But it works, and then it turns into the trend trade. Oh, and then Todd, there's yours. So maybe Pete's was from another time. Just the same look. There's that little snippet and out quick with everything going down. All over the place, Pete. I like it. Nice trading. And then Todd, that was your entry, and that was Pete's exit. And then it comes up. So 75 makes sense. I apologize. That was tough to see. And then when it comes down, there's the jump the fudge in. I love it. Because that is momentum on both charts and nothing in the way. And that's a quick 360. And I love that. That's a quick 360. That's a quick $360. That is a 1 minute $360, guys. And it is momentum and path 100%. Pete, nice job. Momentum and path. Have I mentioned that yet today? Have I said, hey, momentum and path? I hope you're listening. If you're struggling, I hope you're listening. It's a momentum trade. Everything says down, the market's going fast. I don't know, this is your own momentum trade. It's nothing that I teach, but everything says down. You get below trouble and you take it out right down there. Nice job, Cav. Good looking trade. I'm going to say you can't have a momentum trade without momentum. Your small chart has it, your large chart's losing it, but you at least let it get below trouble, almost. Getting below trouble, I think, is the key to good things happening there. Nice job, Cav. And then another one. Termination, all triggers above. It rolls. Momentum is growing. Super strong. Perfect entry. Easy money. Nice job. Great trade, Cav. And what's cool on this one, for you NASDAQ traders, Cav, when that got to your area for entry, those small triggers were so far away. Perfect job pulling the trigger. Really minimized risk for you there. And just easy money right up to those one-to-ones. Great job, dude. I like that. NASDAQ isn't easy to trade. You did a good job with it. All right. Is that it, really? NASDAQ. So it's range bound? Yeah. So Cav, pink one-to-ones on the NASDAQ. Pink one-to-ones on the NASDAQ are termination conditions. And that long was doomed from the beginning. Does that make sense? Guys, if you're going to be a NASDAQ trader, you've got to respect these pink one-to-ones. They're small swing one-to-ones, but they're based off of a huge time frame, which makes them pretty big swing one-to-ones. And you've got to respect those on the NASDAQ. And that is exactly why. Great management. Great management. And you guys know that the NASDAQ and the ES move similar, right? Who said the ES was range bound? How is that range bound better, Dad? That is a grinding downtrend. There is nothing range bound about the ES. That is a very decided lower highs, lower lows. This is a market that's trending down. Now, if your rules aren't met, That's okay. Let me show you guys what range bound looks like. And I'm sure rule number 2 will help me do that. That's a market caught in a range. And there we go. That's a market caught in a range. That's range bound. When you're not getting higher highs, when you're not getting higher lows, guys. ES is actually trending down. But look at the fights, guys. Look at all of the fights. Just because it's trending down doesn't mean that your rules are met. Just because it's trending down doesn't mean that it's easy. It's not. There is a huge amount of just fight going on there. Does that make sense, though, Better Dad? We want to call it range bound. Yeah, rules aren't met. But it's definitely down. The triggers are down. The trend is down. But I mean, you could even draw. I'm not one of these people, but you can see it is clearly trending down. I do like that your rules aren't met and that you said my rules aren't met. And because your rules aren't met, you're going to choose not to trade. There's your channel. John Novak loves these things. Let's see if it continues down from that mid band and stuff. Kind of fun. It's fun to do that. I love looking at stuff like that. That's patterns that I'm learning. All right, Todd. In at 62.45, lines up perfectly. Your entry is above that I intended. Well, what was your intention, Todd? Help me with that. Where were you trying to get in? One of the things your picture doesn't show is intent. And sometimes, look at that timestamp. You traded, that's crude oil news. So it was probably screaming. You probably hit buy here and it slipped you. That's called slippage. When the market is moving so fast that it can't get your order entered and you into the market without movement happening, that's called slippage. Sometimes it's for you, sometimes it's against you. But Todd, why did you enter here? Give me the thought process. Okay. How did you feel about your path? Okay. So why did you enter there? And Todd, do you see how this would be so much more efficient if you would write this on the chart? Do you just jump in because of strong triggers? Doesn't matter. Doesn't matter if it's a sim account. We're not learning the difference between sim and live. We're learning the patterns and the recognition and writing the recipe through annotation that's going to help you find long-term success, right? And so, and let me show you what I mean. And I'm sorry if this feels like I'm picking on you. I don't intend to. What does this tell me in regards to repeating the trade? That's what annotation is. That's okay. You take pictures as fast as you want, but go back and annotate them correctly. The pictures don't go anywhere. This picture is from May 7th, right? It's from May 7th. I could still go back and annotate it. But what happens, guys, is every time you write Y on your chart, you're creating a recipe. So if I take this trade, hold on, and I say, once again, here we go. Todd, I swear you're going to get so tired of me saying this that you're going to start doing it. I had strong triggers, both charts. Price got above small chart fibs. I jumped the fudge in. If I lose momentum, that's my exit condition. Does that make sense, Todd? So what happens? Now you go back and you look at this and you say, oh yeah, it was all about momentum. And I just jumped in because of it. And this is why I think showing the trade from start to finish is so important. Because let's go see what happened. Because there was your jump the fudge in, right? And that would have been your exit condition right there. The reversal bar. Good looking trade. So we want it to be repeatable. You exited that trade and going back to the chart, the entry and exit aren't there. Okay, that's because on your small chart, you don't have the trade markers turned on. So right click on your small chart real quick. Telling you guys, these are the best classes when we get to have these discussions. And go to data series, Todd. And down at the very bottom under plot executions, make sure it says text and marker. And it'll go back too. It'll go back historically. And it'll let you know as well. And that way you can get your entries on the small chart as well where you're taking them. And it'll be easier for you to see them. I love the trade. I think you did a great job with it. I really do. I think you had momentum on both charts. You let it clear. Life is good. And the only thing is we want to make it repeatable. We want to make sure that you can do the same thing that's bringing you success over and over. And that's where annotation pays dividends. All right. Trend trade late. Yeah, a little late, but you're in on the good side of everything. And that's pretty easy money. Wayne, this is awesome. So this is your momentum trade coming off the fib. It looks exactly the same on the range chart with all the momentum. So nice. And then you just ride that momentum all the way up, which is absolutely beautiful. And Wayne, great job on this one. That's a momentum trade, guys. That's all it is. Momentum on 3 charts, it's hard to stop it. Wayne got paid. And then he goes entry here. There it is. Odds favorable, clear path, really late entry. Yeah, for sure. Really late entry, Wayne. I'm not sure why you waited so long to get in. Oh, you waited for the correct side of the small triggers? And it goes up. I don't think so, Pete. If you have one that I missed, repost it for me. I've only had 15 pictures posted today, and I've gotten 6 or 7 of yours. I apologize if I miss it. If you'll let me know, I'll get it. Repost them for me. Strong trending market. Everything says down. And you just go down with it. You wait for the reversal bar for the confirmation. These charts don't make sense. Oh, okay. No, yeah, they do. So we're up here. Mid-band gap theory, strong triggers. I'm not sure. Just taking a shot at the continuation. Got stopped out here in the crash reload. That's about the right spot for your stop, I think. 3601. I'm not sure though. That's weird. Maybe a big spike or something. Yeah, that's odd. That doesn't make sense on there. I can't really say why that might have happened. And then momentum, momentum, momentum. Jump the fudge in and take it until momentum goes away or you're just ready to get paid. Great job, Wayne. Good trades, man. That one's a little weird. That's definitely something odd going in. That should have run for you. It looks like there was a spike that came up that I don't see over here. Maybe because that's 26, 26, 26. You might have gotten stopped out over here on that big push up. But because of the speed, it just looks weird, possibly. I'm not sure. First try at this trade. All right, Lonnie, let's see what we did, man. Resistance, strong triggers, HVA trade short, enter 3304. All right, so Lonnie, are you in here? So you're entering right here. And Lonnie, check it out. You're bouncing off of support. Do you see it? You've already reached support. You've already reached your termination condition, and you're bouncing off of it. Your small triggers are up. They're above the large triggers. So there really isn't an HVA trade here. The HVA trade, Lonnie, is when you hit this area. An HVA trade comes from very close to the area to go down. So right here where you hit the area, you're waiting for the triggers to roll and maybe looking for an HVA trade right here to come off the termination condition to potentially go up. So your HVA trades, the true HVA trades, are going to come from really close to what stopped the market. So here's your support, and that happened right here. There's your breakout that creates the HVA line. So you're coming up into it off of the termination, and then this is where it pulls back to the HVA line from that support. This would be an awesome long right in here, and I'm not sure if the market went up from 3,300, but this is the retest. The triggers are rolling. There's your HVA line. Does that make sense? HVA trades are going to come close to the zones. Or if you're just going to trade an HVA line, you can't fight these triggers. This turned into a trend trade down that went right back to support. And now support's held a second time and it's going up. I like it. And you're riding it, resistance. Strong triggers is a negative. Well, actually, no, that's good if you're going down. So on this one, Lonnie, if you're going to just sell an HVA line, use strong triggers, both charts for highest probability. Does that make sense? And then it's just a momentum trade, but it's a momentum trade coming from an area that says, hey, we're likely to go down from here. So, and I know that you're trying to mimic the TV stuff. HVA trade is going to come from up here. Momentum and trend trades, will come from down here. So there's your trend trade. And it never sets up a momentum trade or an HVA trade. Well, momentum trade or an HVA trade, really. Does that make sense, Lonnie? Excuse me. And it's going to take a little bit. It's going to take a little time to get in there, to recognize it, to become comfortable with it. I know it's a new look. And I love that it's your first try and you're going through and you're talking about it. Yeah. Wouldn't expect anything different. I had to do it too when I started this one. So if you're going to sell an HVA line, it's either got to be right up by the termination, right at the start of the reversal, or with odds favorable momentum, and then you're going to use it as a momentum trade. Does that make sense? It's going to take a little practice. Cool. Keep posting them, man. I love it. Keep posting them. Cav, everything says down, didn't quite reach the fib, pulls right back to the mid band off the strong top. Great trade down to support. Nicely done. Kind of an earlier shot, guys. This is a trade that Nexgen started teaching in 2004. Termination, let the small triggers roll, sell the pull back to the small. It looks just like this. on a small chart. Notice that the large triggers aren't down yet, the synthetics. This is capitalizing off the termination, and Cav, you did it really well. All right, Pete. Potential to break. You take the momentum trade down to trouble, and then you take the trend trade back to trouble. Nicely done. And I'm not sure what was going on here. Maybe a different trade. I like it. And guys, this is a good example. When the large chart says take that short, when the momentum trade fails, turns into a trend trade, notice that Pete's small triggers have broken through, right? Gives him a fighting chance. He traded to the area and took profits. And then when the small triggers led the way, he took that small chart 50-50. Really nicely done, Pete. I like that trade. Yeah, we saw this one. And I said I have no freaking idea why you entered at the 1-to-1s with odds favorable, with the path up, with every indicator up, with the large way above. Yeah, we saw this one. I have absolutely no idea why you went short here. It makes no sense. But you won, which is great. And then when it starts to roll and go down, you go down with it. And guys, I miss pictures sometimes. I know that I do. I never intend to. Saw that one. Saw that one. We just saw that one. I never miss out on pictures. And then Pete, that just goes back to the start of the day. And I know that we saw all 4 of these, because that's how we started our picture looking. Maybe you thought you posted one that you didn't. But I just clicked on every one of them that you posted. Scrolled it all the way back up to 6:50 a.m. All right, if you took the trend trade down to support, you were rewarded. If you took the next trend trade into the termination condition, you probably got stopped out. It is possible. All right, guys, I'm going to take just a couple minutes, refill my water real quick. When I come back, we'll get into the last half. Keep posting all your charts, guys. Keep showing me what you're doing, what you got, what you're thinking. Ask all the questions you can come up with. And then for those of you that are starting to make the transition, do I have anyone here that wants to talk about TradingView today? If not, we'll just keep it on this. But this is your opportunity. Sorry, Todd. Going back to that trade, you were long at 1031. How come? We'll talk about them, Wayne. How come you went long? Large chart says down. Large chart has momentum. Small chart says down. Small chart has momentum. Everything on God's green earth says down, and you tried to go long. How come? Are we going to do this every picture, Todd, where I have to pry it out of you why you did it? Dude, look at your 1037 post. Okay, there's your 1037 post. What does this have to do with that? This trade was taken at 1031. 62.45. Hold on. 62.45. Yeah, this is just, so this is you getting long in way up here. That's news spiking. I don't have any idea why that happened, Todd. I would get with Jason. That's what I would do. I would get with Jason. And I'm sorry, man. I wish I was more techie. I see what you mean between the two, though. 62.45, you went long. And there they are way up there, right? You see them up there. There's your entry, there's your exit. But they're coming down here. Wow, that's crazy. You made money on that trade. Nice job. Golly, that's hard to read. In at 62.45, out at 62.56. Man, yeah, something's not right there. Oh, Andy's not in here. Andy had that problem. Has anyone else in the room had the problem where your entries and exits kept pushing to the right? I'm going to ask Jason, Todd. I'm going to see if he has an easy answer. I'm going to do this, the trade, the markers. I would suggest you get with them too. But I'm going to go put this in the collective think tank and see if somebody can come up with a reason. Man, now that I see it all, that I see the entry and exits, I like it. It was good. It makes sense. No, but it wasn't a short. There was no reason for it to be a short here. If you go back to your entry, you were definitively long. You were absolutely long at 62.45. What we're trying to figure out is why. See how the blue is on the left side, the pink is on the right side. So anytime the arrow points to the right, it's an entry. To the left, it's an exit. So these make total sense. These are out of left field. Something is not doing what it needs to do there. I just posted it. We have a chat with all of us that work for Nexgen. And did you reset and repair data? Did you do that, Todd? That was the first answer that came in. Yeah. Weird. We'll see if Jason chimes in. But if I were you, I'd put a ticket in. I'd go talk to him. Okay, so that's going to be TradingView. Click this button. Places order here. Market's trading at 33.05. Dollars to donuts, Wayne, you're on delayed data. 33.07. We'll come back to it. We'll revisit it. And let me take a look. Yep, there it is right there. Okay. See that orange D? Have you gotten live data for it yet? So go through and make sure that you are live. There we go. So there is the AI. All right, I'm going to take a minute. So something's going on that you need to fix that on TradingView. And we're just going to have to figure out. And guys, one of the things John gave me this morning, and he posted it in the other room, 60 million users. Here's the database. Um, we're about to get to a point to where I can't do all the research for you, where you guys are going to have to come through. There is 369 articles on data in here. And you'll probably activate live data. Purchase real-time data. You won't need to pay for it again to access it on TradingView. Review your trading account, active data subscriptions on that account in order to receive real data on our website. Connect to your interactive brokers account and the trading panel. You're granted 7 days access, which you need to reconnect to your broker. So, not 100% sure on that one, Wayne. But I'll tell you what, I'm going to come back. So, Miss Claire, you said you want some TradingView help. Miss Anna, you said you wanted some TradingView help. So here's the deal. I'm gonna create a little requirement for you guys. You have to ask questions. You can't sit quietly in the background and hope that I say what you want to hear. Let me know what you want to know about, guys. I'm not a TradingView person. I don't work for them. I don't work in tech. I'm a Nexgen person. I'm a patterns person. I'm an indicators person. That's where I excel. But that being said, I'll do everything in my power to help you guys find your answers. But first, I'm going to go reload my water. So I'll be back in about 3 or 4 minutes. When I come back, we'll do all TradingView and see what we can come up with, see what we can get smarter at. And I'll go through my little spiel with the indicators and what we're looking at and all that stuff. Back in a minute. See if we can solve all the world's problems here. So we've got a couple challenges with delayed data, right? Um, let's see if we can find it. Bar replay, subscription to market data. Replay. I believe you. I believe you. I know that you did. So let's see what we did. Let's see if we can find it. So do me a favor, Wayne and Miss Anna, when you're looking at TradingView and you see that D, that delayed data right there, let's, oh, I don't want to flag the symbol. Do you see it in front of you? What happens if you click on it? Ooh, that's not what I wanted to do. Can you click on that orange D? Does it give you any indication? We've identified the problem. Now we just have to identify how to fix it. You have to exit paper trading? Okay. So log out of paper trading. And I'm still live. And then log in with AMP. Okay. And that's what's going to get you to live? See, there you go. So Miss Anna, did you get that? That's interesting because I can do the paper trading, the simulator, and I'm still live. Ah, and I killed. My NASDAQ chart. Sorta. So go down and do you have your AMP login? No, I'm logged into TradingView. That's wrong. I'm going to go through and rebuild. My login is through TradingView. So let's see under profile. Find scripts, published, commented, following. That's not what I wanted. Products, not what I needed. Market brokers more. Profile settings. That's not is. That's okay. We're going to get there. Close that again. I'm going to click on my name up here. And I'm going to go home. That's not what I wanted. We're going to get there. Account and billing. Current plan. All right. So market data. So, all right. We may have gotten there. So Anna, I want you to click on your little picture. Mine's an M. And then go from your name to account and billing. And scroll down and make sure that your data is actually there, is active. Maybe that'll help. AMP is you don't see, okay. So if you click on your little icon, the circle with a letter in it, account and billing should be the second. And there's no account and billing on there for you? No, mine's through TradingView. Mine is real-time data through TradingView. Let me go to the masses. You found it? So, okay, awesome. So look at your account and billing, and just make sure that you have that subscription to the CME, CBOT, COMEX, New York Mex. Make sure you got the right one. Because I've got my TradingView data. So Wayne, I don't have AMP data. I have TradingView. You do have it? All right. Does it say activate? Or it just says cancel's the only option, right? $15 CME. Okay, so you do have it. I just don't know how to activate it. And again, guys, remember, I'm not TradingView, and I wish I was. Paid for data, but delayed. Excuse me, I'm so sorry. Maybe. You may want to. I know that I clicked it, I bought it, and it was on my chart. So I'm a little befuddled on why it's not working for you guys. See if I can get my zones in here. You're skilled at befuddling. I take it next level. I am all about the befuddling. The goal, guys, is that you get in, we get you going, and then we can start using TradingView. A lot of times, guys, I would encourage you go to TradingView. I even think they have a live chat. And I'm not trying to pawn you off, but I don't work for TradingView. There we go. There's a help center. There's a chat center. Here we go. We'll try chat. And we'll see what they say. I'm just going to use the tools that they give me. And one of those is being able to use the chat. So there we go. To activate real-time data in TradingView, you need to connect your live broker account to TradingView through the trading panel. If you've already purchased real-time data from your broker, you don't need to pay again on TradingView. Simply verify your broker account and its active data subscriptions. Keep in mind that the data on the free TradingView updates every few seconds, while paid plans provide faster. When connected to a real broker, the order panel may still be delayed because it uses data directly from your broker, not TradingView. We'll try activate. Yeah, I'm trying to too. Did you make a phone ring? Sometimes we might just have to make a phone ring. To activate, we don't need to pay again. You see data subscriptions grayed out in TradingView. It means the real-time market as provided by a broker. TradingView. Well, Steve, Nexgen is not Chart Prime. Nexgen is not TradingView. And I've written the books Nexgen for Idiots. I teach it every day. Um, maybe I need to quit Nexgen and go to work for TradingView, and I can do that for you guys. Or Chart Prime. Um, I'm cruel but honest. I am. I don't mean to be cruel. Um, I used to have clients tell me, or employees tell me that I said the meanest stuff in the nicest way. I don't know if that's a good thing or not. All right, so guys, let's pretend for a second that we have data. Um, and I'm putting a note in there to our funding group, Anna, to see about helping you with that live data. And I'm sorry I don't have the answer. I hate not having the answers, but that's a part of it. So let's move forward, guys. Let's talk about what we're looking at a little bit, and eventually what you're going to be looking for. The indicators on TV, on TradingView, guys, they're no different than anything you're used to seeing with Nexgen. This is one of the things that I really want to impress upon you. Guys, small triggers are always the small triggers. The small triggers are always the faster of the two. The large triggers are always the large triggers. The way the trigger lines are set up, the way John had them programmed, is they do that same color change, red down, green up. But what you're going to find is in TradingView, you're not always trading with the colors. Divergence will always be divergence. It's a loss of momentum. It's going to be magenta from a high. It's going to be cyan from a low on a large chart. It can stop the market. I don't know, 10K. Have absolutely no idea. And again, I'm 100% not in the loop on the tech side, on the programming, on the inputs. I teach you how to read them. So no matter what the inputs are, those are small, those are large. You're going to use them to define momentum. I don't know. I just don't think that much, 10K. I can't build a watch, but I can tell time like a mother scratcher, you know? And I think this is the same thing. If you know the difference between small and large, you can use this tool effectively. If you understand that divergence is a loss of momentum and not go through the calculations that create that divergence line, simply understanding that this is a line in the sand where momentum is lost, you can use this indicator effectively. One-to-ones. You don't have to know that it's a 100% Fibonacci alternate to know that you shouldn't trade directly into it, that you should rather trade from it or trade to it. And 10K, I'm not trying to bust your chops here, but man, there's a million things you could do, right? You could look up in the sky and you could accept that clouds are pretty, or you could try to psychoanalyze what it takes to create the refraction of the light and the water droplets and why the clouds look different and all those things. And man, I'd rather just find a puppy dog in them. I'd rather learn how to use them for my happiness. One-to-ones are always one-to-ones, guys. They can behave as Fibonacci support or resistance. This is where we get into something that may be new for some of you guys. The mid-band is always the mid-band. It's the same mid-band we've been using for 25, 27 years. It's a moving average, right? It's either support or resistance. It runs through the middle of your screen. The outer bands are probably new for you guys that weren't on market flow. The outer bands, the only thing I want you to think of on the outer bands is it's a point of exhaustion. And if the market has been trending up forever and it hits an outer band, it might bounce. And if the market has been trending down and it hits an outer band, it may bounce. It's kind of a point of exhaustion. It's like a goalkeeper on either side of the field, guys. And then when the market is in such a trend that it busts outside of those outer bands, the outer bands very often can behave as support or resistance. And then the new thing is the zones. And this is what's new to a lot of us. Um, Took me a little getting used to as well. I was using a plan for a little bit where I was drawing my own zones, supply and demand, going back historically, finding tops, finding bottoms, and doing all that work. And you can buy an indicator that does it for you, which is pretty cool. For everybody that is a Nexgen owner, you will get every indicator that we just talked about with the exception of zones for free because you've already paid for software. Zones are something that you're going to need to add on. Chart Prime is who John has found to be the most effective. It's, I think, $40 a month. It's a paid service. There are free options out there. There's one, Algo Alpha, that's pretty good on a large time frame, not so much the smaller. But guys, the zones kind of complete the workspace, and they behave as support and resistance exactly like fibs do. So we're not introducing anything new as we step over. What we're doing is it's a little different look. Instead of a 34 and a 5 or 13, or instead of a 13.2 and a 5.1, Nexgen is using minute charts because we can't recreate the dynamic Renko. Nexgen was using minute charts 25 years ago. It's nothing new at all. And I actually think I prefer the minute charts because they tend to give me less risk when the rules are met, which I really like because it's not a tick value, but rather it's a time value. So let me drop this in the room for you. This is just the indicators. And if nothing else, look at it and remind yourself that nothing's different. It's just packaged a little differently. I'm also going to give you guys this, and I've been working on this a little bit every day whenever I have an opportunity. There's 3 trades that we're going to teach, or 3 trades that we're going to give you a plan for, and I'll give you feedback on as you learn them. There's going to be an HVA trade. Lonnie, this is the one that you were looking at. There's a trend trade, and there's a momentum trade. As I come up with more and more on management, I'll begin dropping them over here, and even termination conditions, when not to take more longs, when not to take more shorts, because your indicators are telling you that it's time to pump the brakes. So I'm going to drop this in the room as well, guys. So as you go through and study, use this resource. Start filling it out with your own pictures as well. And of course, you guys are welcome to drop your pictures in the room and to get that feedback on everything that you see. And if nothing else, we'll just dissect it and we'll figure out what it is. And Jerry S., I had you in mind this morning when I did these. The market's going up and hasn't reached an area. And just waiting for the trend trade. Kind of a pre-look here. Jerry S., thank you for that. Anna B., did you see that? To get rid of the delayed data, you select a different asset. So maybe go from crude oil to S&P. And then when you go back to the one that you wanted, it should reset the asset. Thank you, Jerry S. Claire, if you want the HVAs, they're available to you. If you don't want them, I'll show you how to take them off. Do you want to use them? You should have access. Are you thinking because you didn't get them on the other one, you're not going to have them here? But absolutely, you will have access to them. So you don't want them because we're going to use HVAs for momentum trades. Two of the trades that I teach use them. Oh, Jerry, it gets better. I took all of them. I'm seeing shiny stuff and getting distracted. I want you guys to see this. So when we talk about the trend trade, and then Claire, I'm going to come back and I'm not going to forget about you, I promise. Nothing in the way, Jerry. You see it? It's going up. And we're waiting. We're picking. We're waiting. And guys, these 1 minute triggers down strong, don't fight these. These are horrible to fight. So we know where we want the trade to come from. We know it's not there yet. But the large chart says, look, I'm coming from a termination and I'm going up. And then, Jerry, the next one I labeled patience. Because you're getting there, but see how the triggers are coming down fast? I don't have any close. I don't know what's going to happen. It could push down. It could go. And then the next one says almost. And man, we're getting there. And it did push down. And I never got that close on the right side, Jerry. And look at that. They're starting to speed up and come down. And then finally you get an entry where it closes on the correct side of the triggers there at the mid band. And if I'm not mistaken, this one went up a little bit. But do you see how it fights? Like the strength isn't there. The fast are still down. The large are still down. And I think this one eventually went down further. But that's your entry. So there's a patience piece. There's the here it comes. It's almost there. We're really getting close, but not yet. All right, there's our rules met. And even with that apparently really big looking bar, that was only $70 risk per contract. Like, that's not a lot for a trend trade. Does that help, Jerry? I was thinking of you this morning when I took that sequence. I was like, it's easier to show that sequence with everything in. Yeah. So this is what I've been doing is I've been trying to go through and get these. So Miss Claire, have you opened your workspaces yet? And you're seeing them and you just don't want them? You can take that market flow off, but it's part of the bundle that you get. So if you want it on there and you want to learn to use it, you can use it. But there's no workspaces that come with it not present. But if you don't want it on there, just click this arrow. It'll open up all of your indicators. And then there's your trash can right there. You could remove it. And once I remove it, all the HVAs are gone, everything. You can just trade it like that if you want. Or if you're like, you know what, I want a little extra advantage, come through and click on it. And then market flows back on, but it starts up right at the beginning. Okay. No, you have access, Claire. I told everybody how awesome you are, and they're like, man, let's make sure Claire has it. So yeah, just run those workspaces the way they are. Can you get the dots on top of the charts instead of behind? Hell, I don't know. Let's find out. Let's go to settings, Jerry. And let's go to style probably. Bar color, boxes, panes, labels. That's not it. Let's go to visibility. That's not it. Let's go to inputs. Dot size, imbalance percent. Let's see. Ooh, look, they're on top. Mine are on top. If I put it on there, they're not. But that's on top, right? Is that what you're trying to get, Jerry? Go to the 3 dots on the end. Hold on. Three dots on the end. Uncheck the boxes. Those. Lines, pane labels, boxes. So you leave it just boxes, and that'll make it so you don't see the dots. Oh, leave boxes unchecked. There you go. And that's the look you're looking for, Jerry? Jim H, you and Russ G, thank you. You guys are amazing. Awesome. Thank you, guys. I'm telling you. I hate to admit it. Do you know how hard it is to sit in front of you guys and say, hey, I don't know everything about TradingView? Good stuff. Yeah, it turns out that's it. 3 boxes on the end, the visual order right there. 3 boxes on. So you guys remember that you guys are telling me things that make sense to you. And then go into setting. Hold on, Russ. I want to try and get all of yours. Object tree. Visual order. Okay. Bring to the front. Awesome. Russ G, thank you. Visual order, bring to the front. That's perfect, man. Thank you so much, Russ. I'll put that picture in there too so everybody can have it. Telling you, I get smarter when you guys do this for me. I appreciate you. Does everybody have their workspaces? I'm going to get rid of my NASDAQ, guys, and I'm going to do a new NASDAQ workspace. Whoops. I've been disconnected. Estefania, take care. All right, so let me go to the good one. So Anna, you don't have your workspaces yet, so let's do one. I'm going to go to the instructions. I'm going to get you the link to the page so that we can do this together. So this is the link that's going to get you guys to the workspaces. So follow the link and scroll down, and you're going to go through some hullabaloo. But what you're going to get to are the pre-made workspaces. So we'll do one with me on the NASDAQ, and then you guys can do them for whatever you're doing, whether it's ES, crude, gold. It's right above you in the chat box, Miss Anna. If you look up one, there's a huge link right underneath the message that I posted. And now there's a huge link right under the message you posted. I've got you surrounded, my dear. For the trading plan, yes, Claire. I'm going to help you guys with the trading plan. We're going to do it in the morning education. Last hour is going to be dedicated. Today is a little more of a tech stuff, and that's okay, but I'm not done. We'll go through and we'll talk about the 3 trades that are on the plan. And then, Claire, I'm giving you a plan. So there is the TradingView plan right there, as written by John Novak and I. And then the spreadsheet that I gave you in the room shows real-world examples of those rules being met, what the entries look like. What else do I have for you? There's the one that just talks about the indicators that reminds you that it's all new to you on TradingView, but none of it's new in regards to what you know with Nexgen. Miss Anna, did you open that link? Did you get it? And guys, this is what this afternoon's for. This is what this last part of class is for right now. Ask all your questions. I'm not going to have all the answers, especially on the tech stuff. But in regards to getting your workspaces, getting them set up, all that sort of stuff, and then talking about the trades that we're going to do, I'm excited to do that as well. Claire, there are no videos to the new plan in TV. Not yet. We have been 100% focused on getting the funding company up and running. John and I have been on TV for the last probably 5 months, building this plan and creating it and going back and taking what we know in the patterns and testing it, and then putting it together. But we haven't actually put together any videos on it. Because the reality is, Claire, it's everything that Nexgen already teaches. So if you go to the Nexgen site, and Chris is building it right now, and you go to the trading guide, Nexgen has been teaching an HVA trade for decades. We have been teaching momentum trades for decades. We've been teaching trend trades for decades. So it's really all the same stuff. It's just boxed a little differently, is all it is. It's your same old boyfriend, but he got a haircut. This is it, Paul. You're in it. You're in it right now. You are in the thick of it, my friend. We're still trying to figure out. One of the things that we don't know is what we don't know. So I asked John that. I was like, when do you want to start it? He goes, we may not. He goes, you may be someplace else doing other things. So we'll talk about the TradingView stuff in the third hour. And hopefully, guys, it won't be tech stuff. And it'll literally be an hour of talking about the trades and talking about the looks and you guys submitting pictures and getting feedback. But I realize there's a lot of you that are still kind of brand new. So as much as John Novak, and I love him, he wants you to go figure out how to get this done so that I can start teaching you the trades. I want to give you a little bit of help if I'm able. And he doesn't really just want to do that. I'm just trying to make me look like the nice guy. So Miss Anna, did you follow the link to get to the page? This is being recorded though. Okay, so why not use one and get your TradingView stuff set up on one, and that's totally cool. But when it's time to do trading stuff or TradingView stuff, let's do it on one computer. Jason will help. Jason will get you squared away. All right, guys, I'm going to go through and let's do this. And this is what you guys are asking about. So let me get a slideshow going here. And then Miss Claire, this is kind of what you're talking about. And Paul, this is what you're looking for. And Paul, it's good to see you in here, man. It's been a while. Man, Jerry, I'm smitten with TradingView. I am smitten. I love you. I've got my iPad on the charger right next on my desk. A few months ago, I did a guest spot at a tattoo shop in Austin. And in between clients, I would watch the markets and trade. And everyone's like, what are you doing? I'm like, making money. Leave me alone. It's kind of fun. So the high volume area trade. I've got the iPad Pro, the biggest one. Whatever the biggest one that they make is, that's the one that I have. I don't know. I got mine eventually for art, or initially for art. So I've got, let me go to system settings. I'll tell you exactly what I have. But I've got, so my wife for my 50th birthday got me the biggest, baddest one that they make because I was using it. There we go, about. So what I have is the iPad Pro 12.9 inch. That's what it is. So it's almost 13 inches. And it's easy to read. You're welcome. Absolutely, Claire. You can trade on your phone if you want. I've got TradingView on my phone. It's hard to read. But yeah, you can sit on the beach, get a tan, make some money. One of the ways is with the high volume area trade. So let's go through and let's talk about it a little bit. And it's going to sound familiar. Like these rules are going to sound familiar, guys. The checklist is going to sound familiar. Zone reached on the 15-minute chart. That's your termination that could reverse the market. Market gets to a zone. 1 minute small triggers are below the large from a high or above the large from a low, which means you're going to allow the triggers to roll to show some change coming from the termination. And then you're just going to buy or sell a pullback at an HVA line. So Claire, you're going to be awesome at this. It's just like buying a pullback to a midband. So first, you reach an area. That's the first rule. If you're floating in the middle of nowhere, guys, it's not an HVA trade. Then your small chart from the area, small triggers have to be below the large triggers. Or if it was from a low, the small triggers would have to be above the large triggers. And this roll lets you know that the change is coming. And then your entry is selling that HVA line. You're going to see it come off of a white bar. It'll print out, and you're going to sell it. And a lot of times these HVA trades are going to have maybe 4 or 5 ticks risk on them. It's a lot of fun. It's a great opportunity to capture a top or bottom. And Lonnie, does that make sense? Now that you can see it a little more visually. So that's that HVA trade. And then again, over here, guys, I've tried to get you a lot of opportunities to go back and look at it. There's your termination, there's the roll, there's the HVA line. So this is one of the trades that you guys will be able to take. One of the trades in the plan. You don't see divergence. Why do you need divergence? Are you making up rules already, Miss Claire? So rule number 1, a zone is reached. Oh, the magenta. So you're not familiar with HVA at all, are you, Claire? So we need to have a little talk on that. Let me help you out with this real quick. Okay. Okie dokie. So I've got pictures. Let me get the pictures for you. That makes so much sense. All right. So on a market flow chart. No worries, guys. Awesome, no worries. Russ, you're in my good graces, man. You are already making me look smarter than I am with your help. So ask a million questions, guys. So here is the market flow. And let me show you what we're looking at. And I know that this is going to be weird, but I'm going to tell you to ignore some of this stuff. Honestly, all those little dots in the bars, don't worry about them. No big deal. Don't need them. Not what we're doing. So the thing that it's important on the HVA line. So this green line, this is an HVA line for more up. And this HVA line, and this is going up or down. Green is up. Magenta is down. So Claire, that's where you got confused. You were thinking divergence. I see how that happened. So what these are is when there is a breakout bar. And what a breakout bar means is, let's say that you had a termination and you get a white bar down. A white bar is a breakout bar, and that's not important. But what it's going to have inside of that bar is an area where there was the absolute highest consolidation of buyers, and that's what produces the green line, or the absolute highest consolidation of sellers, and that's what produces the pink line. And what it does for us is, when the rules are met, when the market comes back and hits that green line and everything, it's a perfect storm. This is where the buyers have already said, we want to go up. We are hell-bent on going up. We had all of our up orders right here, and you guys see it visually as a green line. And when the rules are met, you'll buy that green line for a long trade. And the same is true. This pink line represents where the seller said no more up. We want it to go down. We've got all of our orders right at this price level. Hey, Nexgen users, here's a pink line just so you don't miss it. And with all the momentum, do you guys see how the triggers are split, separated? When you pull back to that HVA line with momentum in the favor, what you're doing is you're returning to the scene of the crime where the seller said, buyers, go to hell. We want nothing to do with this up stuff. This is where we're going down. And if you test us, we're going to unleash. And sure enough, very often when the rules are met, they do. So what we're doing is we're using these awesome pink and green lines Because first you had the visual indication on the large chart. Hey, guess what? No more up. We reached one-to-ones. We reached a zone. We've reached an area that could potentially create a bounce. Your small chart is going to say, hey, not only was the potential there, but we're going to change direction to let you know that you have a fighting chance. And then when that pink line prints, and you know, the sellers always have that first push. And right here, and I love pretending I know what they're all saying. Right here, what's happening, that little retracement that gets you back to the HVA line. The buyers with all their fancy money say, let's try again. Let's push up. And guys, this happens a lot. Remember, the market has a memory. And when they push up and they hit that pink line, the sellers just say, we done told you. Sell time. So we use this pattern. First, it's a termination, right? First, we reach the area. We let the smaller, faster chart show us a little bit of change, and then we're going to capitalize on that line of the sand that's produced. Guys, this is your HVA trade. And it's a trade that it happens a couple times every day, pretty easy. I turned off my HVA on there. Let's see if we can find an example. Boom, boom, boom. Where are we trading right now? 61.82. 10.15. So right at news, I believe there was. There's that big news spike. That makes it kind of hard. But this is a pretty good example. When they come to that zone after the news spike, they come up and they dance and they dance. And look at where they get that next bounce. It's right off of that HVA line, right at that point where the buyers said, hey, this is your line in the sand. Do you guys see it? What are the short horizontal white lines? These right here? Here you go. I don't know if you want the pictures, Russ, but I'll give them to you. So the horizontal lines are high volume areas of the bar. It's where the highest concentration of sellers in a down bar or the highest concentration of buyers in an up bar was. Does that make sense? And you can use these sometimes as you grow, Russ. So it's the high concentration of the breakout bar that creates the HVA line. And look what happens. Look at how many of those bars line up right at the concentration. There are so many buy orders at that spot. And you knew about the green line, and then it happens here, and then off it goes. So that's what those are. Those are just high volume areas of the bar. And then when the breakout bar is followed by an up bar, that's when you see the high volume areas that we actually trade from. Good question. And now the large chart is going down. It has not reached a zone. Ladies and gentlemen, we just pulled back to a mid band. Whoops. And we're on the correct side of the triggers. It hasn't closed yet. I did it a little early, but this is the next one. This is the trend trade. When the large chart says down, when it hasn't reached a zone, you're going to wait for a pullback to a mid-band, and then in a perfect world, you'll take a close on the correct side of the triggers. You'll wait for the bar to form on the correct side of the triggers. That's your entry for the short trade. So first, no zones reached on the large chart, not into the zone on the small chart, and we're looking for that close. We're looking for this bar to finish. There it is. Sell that market, ladies and gentlemen. Now we're in a trend trade. I can put my profits down at the large chart zone if I want, and I can put my stop loss just above the highest pivot the same way you would in a trend trade. And what you're saying is this says down, there's my trend trade, there's my stop, there's my target, and you sit on your hands. And that's kind of what it looks like in the moment. The challenge is you got odds favorable momentum against you. These small triggers are hard to win a fight on. They really are. So we'll see if we can weaken them a little bit and slow, and maybe there's a second opportunity. Does that make sense? So that's your second one. That's the trend trade. No areas reached. We just watched it. No areas reached on the 1 minute. Buy or sell a close on the correct side of the small triggers. And then there's another one. Those triggers are still up. Sometimes if it's super strong, it's okay to be a little patient. Fighting these triggers is tough. And with that much strength, you'll get a little overrun. So we'll see what happens here, and we'll see how it plays out. But the trend trade is no areas reached. No areas reached. Buy or sell a close on the correct side of the small triggers at the 1 minute midband. That's your trend trade. Everything says down, didn't reach an area. Everything says down, didn't reach an area. You're going to sell a close on the correct side of the triggers. It really is straightforward, Claire. What happens though, and I'm sure that you are young and wonderful, but old crotchety guys like me see a different look on the chart and get angry. We tell the kids to get off our lawn and we shake our fist and we're like, this isn't what I'm used to. And we fight it because it's not familiar. I may be guilty of that. I don't care for change. But once you realize that it's everything we've ever done, you're just learning to do it in a different environment. And see how strong triggers pushes up? Guys, you'll learn how to respect that. You'll learn how to respect those strong triggers. That's what paper trading's for. So finally, we have the momentum trades. Guys, this is my favorite trade. I think this is the trade that most of you are going to latch onto. It will. Claire, everything worth doing it takes a little time. But remember when you were working on other stuff and you'd show up and post pictures and ask questions, and then you got pretty comfortable and then you just disappeared right out of my life because you were comfortable? We'll do it again with TradingView. We'll do it again with TradingView. I'm not going anywhere. I hope I'm not going anywhere. Momentum trades, guys. You guys are going to love these. No zone reached on the big chart. This is key. No zone reach, right? Not trading into. I don't hope, Claire. I'm confident. Both charts must have strong triggers. Buy or sell any pullback to the HVA line. 1-to-1s or the midband. And guys, I took 3 pictures and it's ridiculous because it's after the fact. Strong triggers. We're up here. Strong triggers. Guys, this is your entry. What you're doing is you're trading a breakout with momentum. Remember when I said momentum is pretty awesome? You're going to let it get above the area and snap back to the area. That's it. Strong triggers everywhere. Rock star. And you're going to buy a pullback to the 1-to-1s. This is where you can use those HVA lines. So you can also, if you've got one of those high volume area lines like pink or well, in this case, it would have to be green. Guys, if there were a green HVA line right here, you would buy that thing with all this momentum. As soon as I'm done recording, I'll make it live, Lonnie. You can use it on a mid-band as well. I love the momentum trades. And here, there's a zone. This says down. We're not buying an HVA line, right? That's actually your close with the small triggers rolling. That would be your trend trade entry. With those small triggers rolling, you would have been around 84, 85. And now we're hoping to go down with a large chart. Do you guys see that? How strong triggers creates patience? It's a lot of fun. I love this stuff. You know what? I do want to go back to just so you guys can see it, and because I do need um, my NASDAQ chart back. I'm going to go through and I'm going to activate one of the templates and I'm going to scroll down and it's real. I'm going to show you how easy it is. I'm going to click view chart and it's going to open it up in view only. And then I'm going to click copy. And once I click copy, this template goes into my layouts and I'm going to click save. Once I do that, I can go back to TradingView and click on the little plus, create that new layout. And then I'm going to come from here. This is my layouts. And I'm going to click on that NASDAQ futures day trading that I just copied. And boom, up it comes. Excuse me, I'm so sorry about that. Look at all that momentum on the large chart. Let's reset this one. And let's see if there were any of those momentum trades in here. Break above, pull back to the zone. Guys, that would qualify as a momentum trade. Maybe not a lot of them. Without momentum, it all goes sideways. With momentum, the market continues. Good stuff. What else would you guys like to talk about? You're both a counter trend trader with divergence from the fib and add on with momentum to the next target. You've done a lot of work to get there. I love that, Claire. So if you like momentum, especially on this chart, guys, there is a pattern that you're going to see when you have strong triggers on both chart. Because I just opened it, Lonnie, let me go to the beginning here. Because I just opened it, there they are. So TradingView starts fresh, or Market Flow starts fresh when you open it. So they're right there. You're watching a fight. Up bar, down bar, up bar, down bar. If you go to like my crude oil one, you can see that Market Flow goes back because it's been open for a while. Same is true with gold. Here comes your trend trade. You guys want to see if it sets up? I don't know why gold looks different. Coming off the mid band, I'm above the zone. I reach the mid band over here. Am I in paper trading? Let's see if we get a close on the right side of those triggers. And we'll have to see what happens. Gold is persnickety, somebody told me once. There are strong triggers, but you can see how the bars are starting to weaken them. It's too soon for the trend trade. That's what I want you guys to get out of this. It's too soon for a trend trade. Look how they're pushing down lower and lower. These minute bars are going to build a lot of patience in you guys. They really are. So Claire, counter trend trading, you're going to be able to do that using this market flow chart. When you're coming off of an area, when these small triggers roll, Claire, oh, did you, I have something for you, Miss Claire. Nope, videos, educational room, market replay. Let me search real quick, masterclass. I think that's what he called it. I do believe this is the one. All right, Claire, this is where John Novak talks about white paint bar trades. Using that breakout bar off of an area, and it's the anticipation. It's the anticipation of the HVA line that you're trading. So coming off of the zone, this white bar trade, when it pulls back to those faster triggers, they're on the wrong side of the large here, you can start to anticipate that push down. You can anticipate that high volume area potentially being built. And Claire, that's going to be an awesome way for you to incorporate market flow in on taking advantage of those tops and bottoms. I'd watch that video. He did it for a while. He did the master class, um, and then eventually that just became public knowledge because everybody just started posting it in the room. Did you guys notice that with odds favorable momentum, this zone broke, pulled back, behaved as support, and now it's pushing up? That's going to be a very common theme. I think you'll enjoy it. I would do it whenever I listen to John's videos. I go 1.5 times speed. He's very deliberate in his cadence. I tend to talk fast. If you 1.5 speeded me, it would be tough to follow, I think. And then look how it never gave the trend trade. Oh, what is this? This is gold. Where were we looking? Was that it right there? Everything says up, top of the zone, pulls back. There's your mid band, close above. Off it goes. I don't think that's what we were looking for. This is the one that we were looking for. Waiting for the close above. And guys, look at that. There it goes. Little bit of patience. Man, amen, better dad. Mark Douglas will change your brain. Do you guys see it? The 1 minute triggers demand patience. And then once you get to the good side, once you get to the party side of them with this chart leading the way, that's your trend trade. And you can see your first sign of trouble. It's very clearly spelled out for you there. You've watched it yesterday, so you're rewatching after this while taking notes. I love it. What else do you guys want to talk about? And I'll tell you what, that's noon. I'm going to go